But anyway, as you can see here, I'm focusing in on the London sell-side liquidity here, and I'm at the 9:30 opening bell. I'm going to be expecting us to rally up into this fair value gap and the breaker here. And then from there, I'd look at the sell-side liquidity to be rated. That's just what I'm initially speculating. And lo and behold, if you watch the pre-market analysis, we have this daily imbalance delivered above the buy side liquidity. And I said from there, I would like to see us continue lower. And then check on NASDAQ. So we do have a slight, if I can find it, we do have a slight SMT divergence. So NASDAQ, excuse me, NASDAQ was actually not able to sweep this Thursday high right here, but however it did still sweep the London high coupled with the Asian session high. Okay, so slight SMT, we have a higher time frame imbalance delivered on ES. Okay, and then we have an opposing target right here, and here's the 9:30 opening bell right here. So let's see, does it give us that rally we want, or does it just go straight down for London low? Okay. NASDAQ is a little bit more downside to achieve here than ES does. So look where NASDAQ is, and then look at ES. Okay, already gunning for the London lows there. So we got a small little rally, but not enough for us to engage with it, right? So basically everything I just said in the past 30 seconds coming true here with the 9:30 opening. Okay, and there it is, beautiful. So everything called to perfection. Obviously no entry though, but if it would have rallied up into here, I absolutely would have shorted that. But you know, you get what you get. Now the next level, obviously I did not have it annotated just yet, but the next level we're looking at is going to be new week opening gap here. That delivered a lot quicker than I imagined it. Beautiful though, perfect. Okay, so here's our weekly opening here, and then here's our previous weekly settlement closing. And hold on, let me zoom in here, make sure I get it right. Perfect. Okay, so new week opening gap. Just hovering above that right now. Okay, now why is this something that we target? Well, if you've already been with me, that this is a beginner question. You already know this, but there's fair value being held for larger funds down here. And what that means is larger funds are able to accumulate their positions here and many other things that I'm not going to get into right now. But if we're using our Fibonacci tool, okay, we're going to use the low created to the high. Right here at equilibrium, oh my goodness, it just keeps happening, doesn't it? It just so happens all the liquidity pools that I keep targeting intraday stack up something like this. We have equilibrium, and right below we have sell stops. Boom, delivered. What's the next discount array in the red shaded area? New week opening gap. Beautiful, isn't it? Now let's go to NASDAQ. Not quite sweeping the... Looks like we swept the London low, but not the other one. Not quite. Look at that huge wick coming up off of it here. So you're probably looking at this and like, wait a minute, isn't this an entry point right here down in the new week opening gap? Well, for me, it's not, just because I'm opening myself up to the 50-50 risk of, you know, us retrading back to 9:30 opening. So, and we also, not to mention, swept that key discount liquidity pool. So those two factors make me sit on the sideline until I see something that's a real setup. Okay. And, you know, it just comes back down to you want to continuously reference the video that I just released on my YouTube. And that's because you watch that video and then you come into the trade, any trading day. You're like, well, okay, so what I learned from that video, let me ask myself here, is this my model? Did it perform? No. Will it likely perform tomorrow or the next day? Yes, but you know, obviously in this specific week, it probably won't perform tomorrow just because it's the day prior to FOMC, which is actually why I'm streaming on Mondays, because typically Mondays are actually clean prior to large news events, but obviously then Tuesday we're not going to expect too much. Not to say that there can never be a setup on a day prior to FOMC, because that's just not true, but it's more likely to not deliver in our favor when it's the day prior, because we're engineering liquidity, we're time distortion, that type of thing. Let's check on NASDAQ here. Okay, nothing I like in NASDAQ right now, other than obviously we attacked the sell side liquidity that I mapped out beforehand. So just compare and contrast. We didn't come into the session and wait for the sell stops to be engaged. Like, okay, yep, there's my level. It's been taken. Sell stops taken. Boom. No, prior to 9:30 opening, I said, okay, watch this level right here. We have a fair value gap coupled with a breaker, so we have a high, low. And why is this a high probability breaker? Well, after this order block was formed, yes, it was once an order block. After it was formed, it rallied us up above the buy side liquidity and into a key daily level. And then from there, we collapse, making this a failed order block, which transforms it into a breaker, yes. And then if price were to rally back up into there, we'd understand that that's mitigation for larger funds, and that would be a selling point. But didn't even have the wits to get up there. Just very weak. Okay. So let's see if we can get down to new week opening gap. Okay, looks like NASDAQ's continuing lower. And if you take a look here, okay, remember I said I'm not shorting the fair value gap because we're risking it coming back up to 9:30 opening. And why do we go above 9:30 opening? To reaccumulate short positions in a sell program. So if I shorted this, I would have been safe so far because it obviously did not get up here. But on NASDAQ, did it? Yes, it sure did. Twice. And here we go again, back above it a third time. Filtering out low quality setups. There you go. So let's watch it. Let's sit and watch. There's nothing to force here, guys. Okay. Obviously you saw the precision and beauty in all the levels I called out here, but there's nothing to, or at least for me to personally enter on. I honestly, I don't know. I don't know what every single one of your guys' model is. I'm sure most of them are similar to mine. Okay. It's not a matter of the model because we know they all work. Okay. You can make any model work. I know guys making like ridiculous amounts of money with simple things such as trend lines and stuff like that. Am I ever going to trade that? No, absolutely not. But point is, it's not about your model. Okay, obviously the model that you have gives you an edge, which is what allows us to get in here and make money in the first place. But what makes that all work, you guys already know what I'm going to say here, don't you? It's the psychological aspect of things and the risk management. Okay, so without that, your model is useless. All right, so back up into the 1 minute gap once more. NASDAQ a lot stronger than ES here, which is not a surprise if you pay attention to every other like the stuff I say in here is not random. Okay, it repeats over and over and over again. And if you didn't believe that before, you're definitely gonna believe that watching my live streams for at least a couple weeks. What do I always tell you guys? The SMT divergence, the one that fails to make the low, is always the stronger one to the upside, and the one that you want to be longing if the opportunity presents. Did NASDAQ fail to take out the lows? Yes, it did. Is it very, very strong? Comparing and contrasting it to ES? Yes, it is. It's almost the whole way back up towards this pre-market high. Where's ES at? Not even close. And that's because we swapped the sell side liquidity. Okay, very simple. Nothing, no magic here. None of that. So slowly but surely we're getting back up to 9:30 opening, as I said. Okay. Once again, this 1 minute gap could have waked up in here and delivered straight to the new week opening gap, but that would actually be counterproductive. You're actually tricking your mind into thinking profits are serving you well, and really they're not, because a lot of times you're going to take this setup because you got that one winner off of it where just so happened to pan out. The 90% of other times where it doesn't, you're going to come in and try to do that again and get burned multiple times, and then you're going to be like, well, you're just going to be confused basically. Which is why I always do stuff like this, like trying to filter out low quality setups. So let's check on NASDAQ. All right, so NASDAQ completely shifted above that 9:30 opening swing high that was formed. We're back into the fair value gap. Is that a long for me? No. It's not a long for me. Why? There's multiple reasons. Number one, what ES looks like. Number two, very large wick left behind. Number three, untapped London low. And ES, very close proximity to new week opening gap here. Okay, all those factors, I'm not long in it. Okay, unless it really, really gives me something just powerful that I'm convicted in the upside, then okay, cool, I'll take it. But for now, I'm looking at bearish price action because really the work has already been completed here. We came up, made that SMT divergence, highs were ran out, displacement, opposing targets here, discount for Vega gap, new week opening gap, and then the overall bearish order flow that we've seen in the prior weeks. Okay, and this is honestly very nice to see. That's why you saw me do the pre-market analysis last night. I did it live. Only about 3 of you were able to attend. You know, I get it. Family stuff, busy. But the reason why I did a pre-market analysis, I used to do them every single week, remember? But I stopped because what? I mean, what am I going to do? Every single week, it's just going to be the same thing. Okay, well, we're still bullish. I want to see higher pricing above this level. It was just going to be repetitive. So now that we're finally getting opposing price action, I can actually reasonably like line stuff up for you guys ahead of time, ahead of the week, before we even open. Okay. So let me see here. I'll go ahead and map out this inversion gap because we're back above it. Notice the bodies within the inversion gap here. Isn't that beautiful? So yeah, not quite anything for me to do here. I don't even care if this would pan out as a long up to the high. I'm just simply not bullish right now. Okay, and I'm very opposed to taking longs right now. Okay, I would have to see a lot of other signatures compose together for me to really sway my opinion here. So I keep peeking at dollar index here. Okay, obviously on the opposing end we have a very bullish dollar index here, and as you can see we rallied above the highs here, and lo and behold from the pre-market analysis, here are all my levels here. Okay, I'm bullish on dollar index. I said I wanted this to rally up into this Vega gap. I don't want it to stop here. I want to see it to come the whole way above and disregard this imbalance. And if we get up into this weekly Vega gap above market price right here, absolutely, I'm very, very confident and convicted in framing longs up into the highs here, and maybe even up here. Okay, so that's what I'm looking at on dollar index. I'm bullish. If you need a in-depth explanation, I posted that on my YouTube channel for you guys to go back and watch. It's a full breakdown pre-market analysis for dollar, ES, and NASDAQ. Okay, so dollar index doing everything I wanted it to. Average is doing everything I wanted it to. Just gonna see if my model presents today, and if it doesn't, guess what? $0 P&L for the day. But if it does present, well, we'll see what's gonna happen. I'm gonna be in that shit, and I'm gonna use my 5-handle stop loss or 10 to 20 handles on Nasdaq, and that's it. Okay, that's all. Every single day we come in here, that's all we're doing. Does my model present? Nope. Okay, well, we're not doing anything. Does it present? All right, cool. We're in it. That's the beauty of having a model that you know works and you're confident and you've seen repeat years and years and years. You're not going to have that confidence if you haven't been doing this for at least a year minimum. You need to do this for at least minimum for a year, and I mean a year of like demo trading or something, before you should really be opening up a live fund account. And that's just my opinion, because I think I was damn near 2 years in before I placed the actual live trade on my AMP account. I remember it was beautiful. But anyway, this SMT divergence is obviously holding strong here. I mean, ES just completely broke above the swing high formed on the 9:30 opening. And then here we go with NASDAQ. I mean, soaring up to the highs here. Like I said, I'm not longing this. I'm not participating in this. I'm not bullish. Okay, maybe I can frame a short off the high now, but other than that, like, I'm okay with it if it just wants to go higher. And also, the fact that it's going higher here, I'm going to need to require it to actually sweep this high now. Okay, that was untapped. And then right above that, we're going to have, whoops, not the 3-hour chart. I don't know if I'm ever going to have a use for that. But anyway. And I can just keep this high here. So this is going to be our old Thursday daily buy side liquidity high. And then that high is the same as the low end of this daily for value gap. So just know that this level is not only an old daily high, but it's also the low end of a daily fair value gap. Okay, so just so we have that out there. Okay, so we'll let it rally up into there if it really has the speed to do it, because I wasn't even wanting it to trade up here in the first place, but ultimately we delivered the opening range. All right, so once again, though, basically the narrative I'm seeing unfold here is, okay, we swept sell-side liquidity in London. We didn't even have the weakness to get down to new week opening gap. This could be a catalyst for bullishness going forward. Okay, we're back above 930 opening range high. Okay, back in the fair value gap here, and then we have NASDAQ clearly the upside leader, and we want to see it rally up into what? The level that I just gave you right here. All right, so watch this down close candle form now. Okay, this one's going to be important. Okay, this is our daily range that we're working within. Okay, we have a down close candle formed right at equilibrium now. And now I'm going to look to see, is this the down close candle that they're placing in around equilibrium to then accumulate long positions if they come back to it. All from the mentorship tab. Nothing new here. Almost got up into that imbalance I wanted to see. Okay, also we're going to go ahead and annotate. So wait a minute, GK, why haven't you pulled the trigger yet? Look at this wick here. Do I teach you guys the long with wicks like this? I mean, it at least has to work in a little bit of it, right? It's very, very inefficient. The algorithm views that as an imbalance, okay? So once I see like 25%, right, like we just got right here, then you'll see me have a little bit more confidence, okay? Okay, boom. We have that delineated. Perfect. So we have 25% delivered. Can it get midpoint? I don't know. We'll see. But, you know, if it does get midpoint, then obviously we're not going to be bullish anymore, okay? So back below the 930 opening here. Okay, this here was a failed order block placed at equilibrium, so obviously I'm not going to consider this anymore. Let's go to NASDAQ. Okay, perfect. So if I were to be longing NASDAQ definitely is an exception, I will say, with this wick here, just because of how aggressively we rallied away from this wick towards a higher time frame key pool liquidity. All right, so we have NASDAQ slipping here with the butterfinger. So yeah, I definitely don't feel inclined to do anything here, okay? You're going to notice that I'm saying all these things, but I'm not taking an entry, okay? There's a very specific reason why I have not taken an entry yet. And acquiring the skill of patience. That's it, okay? And patience in waiting for your model. So this video is assuming that you already put in the time and hours required to even, you know, get your own model, right? So notice it said model and not models. You can have models. I have multiple, but really when it comes down to it, all you need is one, okay? But anyway, in this scenario here, you would want to see it kind of obviously close below the inversion gap and then comes back to the high end. You'd want to see it leave that quickly. You wouldn't want to see it retrace back up to the up close candle and, you know, above the body. So in my opinion, this is going to be a continuation of a buy program, okay? So basically what we're seeing here on ES is after sell side has been swept, we came down, worked in this 15-minute wick. 5-minute time frame, we came down. Okay, notice we're staying above midpoint of this down close candle. You can measure it out yourself if you'd like. And then also, if you take note, you're going to see we came the whole way down and swept this short-term sell-side liquidity low, traded to the fair value gap. Okay, now we have a change in the state of delivery above this order block right here, okay? Now, all right, let's do it. I do this almost every single time I call someone an order block. It's not just, oh, we have a down close candle and it traded above it. No, that's bullshit. Why is this an order block? Why? Ask yourself. What did this down close candle do? It drove us down into what? Sell side liquidity and this imbalance. After that, we have strong displacement above it, above the opening. There's our change of state delivery. Did it create a fair value gap? Yes, it did right here. Did it wick down into that? Yes, it did. Got above the order block, change of state delivery. Now what do? We seek buy stops, buy stops, buy stops. Okay, NASDAQ's a little bit different. We had the SMT left behind this wick, and then obviously we come up, and now the body's remaining above this 15-minute inversion. And NASDAQ looks a little bit shaky right now in the consolidation. All right, boom. I'm gonna go ahead and long this reaction off of this order block here. Okay, sell stop's gonna remain below. Okay, I'm gonna have to open it up one more handle than I typically do on the stop loss, so it's gonna be six handle stop loss. Okay, that's why you see me using one contract. Then I'm just gonna aim for the high end of this blue shaded area. Okay, this is all that I need. I don't need any more than that. So let's let this ride here, okay? Longing the order block here with all the narrative that I just gave you guys real time, and then simply just aiming for the lowest hanging fruit, which is going to be the highest point of that level I gave you guys. So essentially we're aiming for 7 handles, okay? 7 handles? What the? 7 handles? You'd be surprised the career you can make yourself with consistent small run-ups like this. Alright, so notice the sell stop remains below the body of the down close candle here, okay? Let's check on NASDAQ. Okay, getting close proximity to that high as well. That was a sudden turn there. Alright, so watch this volume imbalance that's created within this premium level I gave you guys. Okay. This should springboard us up into the take profit. Boom. There it is. Okay, I'm out. That's it. 7 handles. This here is a quick in and out bread and butter setup. This was my model that performed, and guess what? Took it. That's it. Nothing more to it. And yeah. Given that it's a Monday, it probably will be my only trade, but yeah, I think that's it. I wish I could have put 2 contracts on this, but if I'm longing as it's rising up, I'm not going to use 2 contracts. I'm going to use 1. Okay, so if it's, you know, rallying down and then I'm longing it, sure, I can use multiple contracts. But if I'm longing like off of this reaction here, I'm going to use 2 handles, or sorry, 1 contract, especially if I have to extend my stop loss a little bit more. So that's just following the risk management plan. We followed the model, followed the plan. We had the patience. We filtered out, I mean, at least 4 low quality setups. So that's on you if you took them. But we filtered them out here live on stream, and then we caught the quick in and out high probability trade. Let's see if NASDAQ can get up to this daily draw up here.